Hey guys, welcome to another video. Now in this video I want to talk to you about the first thing you should identify before putting on a trade, which is the conditions of the market structure. Who's in control of the market? The bears, the bulls, buyers, sellers, supply, demand. What we really want to focus on is what the market is doing and we can go along with the market. By identifying the market structure, it really puts the probabilities in our favor. So I want to start off with NUE, ticker symbol. As you can see, I already have my trend line drawn. I'm going to erase it and just redraw it again. But what I usually use is a channel, makes it a lot easier. Identify the trend. And as you can see, it fits perfectly, right? So right now the market is making higher highs and higher lows, higher highs, higher lows. So what this means is that once you make a high and it comes back down, this low is lower than the previous low. So we made a higher low and we made another higher high. This high is higher than the previous high, right? So this means that the market is in the uptrend. So as you can see, higher highs, higher lows, higher highs, higher lows. So when you go ahead and take a trade, it makes it a lot easier. So I know if I decide to get into the trade at a key entry point, which is at the bottom of the channel, my profit target is to break the previous high. So it's in the uptrend. So it puts the probability in your favor. As you can see, the bulls are in control, meaning there's a buyer's market. Everybody's buying, right? The buyers keep pushing the price up. So what happens here? We're expecting the price to hold, of course. So once it comes down to this level here, I'm getting ready to buy to overtake this higher high. But what happens? You actually have an overshoot, right? So as you can see in the previous higher highs and higher lows, there was no overshoot. It was contained in the structure. But once this overshoot happens, it should give you a sign that there might be a break of structure. And what happens next? When it pulls back down, there was a break of structure as we didn't push back up. So we're expecting a higher low to form here. It didn't, and actually broke the previous low, right? So that's a break of structure. So now that shows you that this channel is no longer invalid. So you want to wait for the next one. Moving forward a little bit, as you can see, if you look at the bigger picture, there's also another higher high and higher lows forming as well with NUE. So I'm going to jump to the 4-hour chart. And it's the same exact thing, same trend again. Higher highs, higher low. This low is higher than that low, right? And now we're expecting a new one to form once it comes to this level, but this low should be higher than the previous low. Nothing is guaranteed in the market, but you want to wait for key entry levels to take this trade to the upside if it does show you confirmation. Now let's jump into a downtrend, and this time the bears are in control. So same exact scenario as we saw previously. Now in this time, the bears are in control. We're in a downtrend. So we're not looking to buy anything to the upside because the market or the market structure is in a downtrend. So what I want to focus on is just puts or sells where we make money or you're shorting the market. In this case, what that means is that you're making money when the market is selling off or is going down. So as you can see here, we have a lower high, lower low, lower high. We're expecting a new low to break this structure, of course. Right now, we're in the middle of the trading range, but it's the same exact scenario, right? So same thing as I drew up previously. You have your highs here, another high here, another high here, and the lows are forming right there, right? And right there. So lower high, lower lows, lower high, lower lows. So knowing that, I know my key entry levels. I want to take trades at the top of this trading channel. You want to avoid any trades in the middle of the channel, and you want to avoid counter trend trading, right? So we only want to take puts at the top of the channel, being in the downtrend. Every time it makes that high, we're taking a sell to break that previous low. The third market structure that we have is a trading range. So we're going to take a look at Clorox. And as you can see here, if you look at my previous video, it shows you how to draw support and resistance. But as I mentioned, I like to use the channel for everything here. So we have support right there, and we have our resistance level right there. Right, so I'm going to switch to the 4-hour chart so you can see a lot clearer. And right now, as you can see, right, we're not making any higher highs. We're not making any lower lows. Right now, it's just moving sideways, but it's still contained in some kind of pattern or structure. So as we draw these two lines, the price action or the price just keeps bouncing in between these lines. So just knowing that alone, it makes it a lot easier for you to target where you want to buy and where you want to sell. Now, once the market gets to this bottom area, right, you want to buy, pushes up, and you want to sell here. So you take in profits here. And if you want to switch your bias, now I know since it's in this area, I want to take sells here or puts, meaning I'm buying for the market to go down and I can take my profit at this level here and vice versa. As it continues to be contained in this trading range. What you want to do is you want to avoid any kind of breakouts. 90% of breakouts fail. A lot of new traders, when they get into this game, they see something like this. Once this breaks out, oh my God, it broke out. All right, everybody's going long. And what happens? It broke out, but then it came back into the trading range, snapped right back into it, and the market sold off. And what happens here? Okay, well, it just broke out again to the downside. Now everybody's thinking to go short. All the new traders are going short, but smart money and smart traders know this is not the case at all. It comes back into this trading range, we get confirmation, and it pushes up and touches the top of the trading range. So you want to avoid breakouts, and you also want to avoid trading in the middle of the trading range. Identify your key zones, right? The top, the bottom. When the price comes to the top, you want to fade the breakouts. When the price comes to the bottom, you want to fade the breakout to the upside. So that's your three structures that you have. So you have your trading range, market is moving sideways, it's consolidating. You have your uptrend, the bulls are in control. Then you have your downtrend where the bears are in control. So once you identify those three, those are the only three market structures you're ever going to know, it makes your trading a lot easier for you. Thanks again for watching. Make sure you like and subscribe. Take care.